Alright guys, welcome back to the channel. I wanted to share a trading opportunity that's on the radar right now so that you could follow along and see how the market plays out. I don't like hindsight stuff. I like to share what I'm actually looking at myself in real time so that you get to see the ups and downs of trading. And there's a really nice opportunity on the radar right now. We've had a great start to the week. We've had a few setups that have played out in our favor. We had the euro dollar. Many of our live room members caught this, but it was a classic textbook flag breakout pattern here. So if you caught that and you're watching, let me know in the comments. The other one was the pound Aussie breakout setup. This was more on the daily time frame. So if we look at the daily time frame here, you can see we had that big breakout for that compression channel, which is absolutely textbook as well. Similar setup on the pound yen that I shared with you guys as well. So go and check out that video that I used Forecaster to identify that setup, and that's still in play, and it looks like it's going in favor of the analysis there. So amazing, right? This should give you confidence that these patterns exist and they happen frequently and they're predictable, and if you can build rules around them, you can capitalize on them as long as you can trade those rules consistently, right? So that's all trading is about. So the next setup I want to share with you is on this pair, and I'm going to remove these drawing tools and I'm going to show you what we're looking at. So first things first, yes, we're in a big bull run and we've had this big bullish momentum recently. And when I look at things like this, I know that this can't go on forever. You know, we always see the market has to retrace, the market has to correct itself, the market has to have a relief, and we see 1, 2, 3, 4, 5, 6, 7, 8 bullish candles in a row. That can't go on forever. So whenever I see things like this playing out in the market, although I'm not a counter trader, right, I am a structure-based trader. So whenever we have these big runs and there's likely to be a sell-off, what I'm doing is I'm looking and checking whether to see if there's previous major resistance at that level as well, where historically we've been proven right that the market rolls over or has a high probability of rolling over. And then we want to add and build confluence so that we've got a great case for entry, and then we want to identify how we can get in based on our entry technique rules. So if I was to run through the IPDE, identify, predict, decide, execute, what I'm looking for is I'm identifying a bullish market that is likely to run out of steam, okay? And I'm predicting that we're likely to see a little sell-off here, okay? So it may not, it may just continue up, but from all the experience I've had in these markets, it doesn't usually go on further than this without a little pullback, a little relief rally. So next thing I'm doing is I'm going out and I'm looking at historical data to see where we had resistance in the past. Well, look at this. We had these massive rejection candles historically here, and this tells a story. If you look left, structure leaves clues, right? And you can see even recently, the most recent candle there was a doji before we rolled over, and we had this kind of head and shoulders set up in here. But prior to that, big rejection candles, big rejections at that level. So we're approaching the start of that level right now. If we zoom back out to present day and I just drag this across here, you can see we're entering that zone. Now, it doesn't mean that just because we've entered that zone, I want to now, get short and be that aggressive, because I want to take high probability setups. One of the things about pound Aussie, pound yen, and those bigger ATR pairs where they've got a big average true range is, yes, you can make a load of money, but you can also lose a lot of money, right? The ATR is wide. Sometimes the spreads are quite big. We want to make sure that we are we're going to maximize our profits on this, which means I usually look for real high probability setups. I look for high reward to risk profiles, and I like a shallow window for entry. So in other words, a real high probability window that I can pinpoint, get tight stops behind, and get a great reward to risk profile, and the strike rate is high. Make sense? So as we approach this, I start going to the D, which is decide, on my strategies on how, like, basically opening my trading toolbox and say, how can I get involved in this particular setup? Well, I know at structure I can trade double tops, and double tops are a great way to enter these because they give you a conservative entry with a great reward to risk profile, minimum risk, tight stops, great high probability setup. So what I'll be doing is I'll be looking for that entry. Now, I won't be trading this on the daily, but if we drop down to the 4 hour, you can see that we're starting to see this rollover, and RSI has gone way overboard up at 84 odd, right? So over 84 on the RSI, which means that's a great indicator that there's, you know, likely to be a bit of a roll off. Even if you look at the MACD is really high. And what we're looking for on the second test, so this is test 1, what we'd look for on test 2 is a nice price and time symmetry retest, not dipping down too low into previous structure or anything like that, but a nice double top. And then on that second test, we need to retest the high of the previous test, but not break and close above it. And then if we do that, it's a valid double top setup. And what we're looking for added confirmation on these indicators is divergence. So you want the RSI to pull back into an acceptable normal level on that second test. And if you get both of those things, you know, that is added confluence that is a higher probability setup. So it requires a little bit of patience. I mean, if you're really aggressive, you've actually got some tweezer tops here. Some people consider these tweezer top candles. Those of you familiar with candlestick patterns, you might already be entering. But what I like to do is wait for that added confirmation, get that double top entry, wait for the retest. The 4-hour time frame is going to hold a lot of weight compared to, say, the 15-minute. So wait for the double top. And then if we get the retest, where are we looking for targets? Well, again, I'm not looking to push beyond major structure looking left. Like, I don't want to fight beyond this level here. And I don't want to fight beyond this level. We had this pregnant pause on the way up as well. I want to be in and out with the highest probability move as possible. So even if I get in here, let's just say, you know, best case scenario, I get in and we get a retest of the high. I'll be putting my stop loss and ATR above the high, whatever that is at the time. Might be 20, 30 pips, 40 pips, say. And then I'll be looking at a target down here, which will give me about a 2-to-1 reward to risk profile. So that is giving me a tight stop, high probability entry, conservative entry, aggressive target taking at a 2-to-1, and not having to fight and go through the pain of market bouncing off previous structure and all the rest of it. If you do want to take multiple targets, that's where I'd split my targets. So if you're going to trail stops to the secondary target, by all means, take some of your target off here and then trail that down on a lower time frame behind each and every low. If you want to see me do a video about trailing stops, type trailing stops into the comments. I've had a few questions about that, and I'll happily do a video if you type in trailing stops into the comments. So that's it, right? Now, if you're even more conservative, you might wait for the double top and then wait for what we call a 2618. I'm not going to go into that in this particular video, but it's just another confirmation where you're violating the initial retracement here and then getting a final push up into a zone, and then you're shorting at that point. Normally with a 2618 setup, the reward to risk profile is about a 1-to-1, so because you're shooting for a retest of that low. So it's not as attractive in terms of reward to risk profile. So I'll be looking for the double top on this one. And then finally, you can add more confluence at this area. You know, you might say, oh, there's a 25 flat even handle number, 2050 even handle. That might be a discretionary point for your scoring system. You might have some Fibonacci confluence. You might have some other candlestick pattern that you pay attention to. But that's what trading's all about. It's about thinking like other traders, having an ability to see pattern recognition based on human behavior historically, and then building a set of rules around that, and then being able to dynamically adjust your conservativeness or aggressiveness, whether that's an entry or a target taking position or a stop loss position or your type of order, and you dynamically adjust that in each and every situation to maximize profit. That's how you become a great trader. Okay, so let me know in the comments if you want to learn anything else about this, or let me know what you're looking at. And I hope you enjoy this. If you did, let me know. I'll do many more of these if you're enjoying this style of video in my new studio. And let me know. And until next time, have a great day, and I'll see you then.